Good evening, viewers. Thank you for joining us today. It has been 3 years since we ventured into portfolio management services. Solitaire, our multi-cap strategy, has crossed yet another big milestone in its journey. We have today with us Mr. Shyam Sekhar, the fund manager, Solitaire, who will take us through the exciting journey of Solitaire. Good evening, sir.
Good evening.
So, first I would like to ask you this question, sir. 3 years of Solitaire. What does this mean for a Solitaire investor?
The most important thing for a Solitaire investor is to get that assurance that investing consistently in Solitaire and remaining invested will give him the desired investment experience. We couldn't have asked for a more testing phase to establish that point, because we started in August 2019. We finished investing the cash in February, and we had in February 2020, immediately we had the COVID crisis, and we had not invested in a way which was going to protect us from COVID. So in that sense, we were quite exposed to the COVID shock. So from that point, seeing so many events, and the portfolio has weathered all these events and still delivered an investment experience which the investor likes and which he believes more in at the end of 3 years. I think that's the most important thing about the Solitaire journey, and that's what matters most to the Solitaire investor in the past, in the present, and in the future. The investment experience that a Solitaire investor gets should give him the confidence to remain invested in equity as an asset class and to scale up his portfolio beyond what he would otherwise have imagined. So he must make time his friend and Solitaire his partner in growing his wealth.
So you spoke about the Solitaire investor. Who is this Solitaire investor, sir?
I think the Solitaire investor is somebody who has a moderate risk appetite, who wants to participate in the India economic story, who doesn't want to take crazy risks, but at the same time wants to get returns which reward his investment behavior. You can have a moderate risk appetite, but still you can, through your investment behavior, improve the kind of opportunities that you would take, improve your risk taking by taking lesser risks and still achieving better returns, which a high risk taker would usually aspire for. So that in essence is what matters.
So we spoke about the Solitaire investor being a moderate risk taker, and whenever the market gives you opportunities, that's when he gets in, and that's when he has to get in to get the investment experience that Solitaire delivers. So this definitely wouldn't have been a cakewalk. How did we go about this journey, sir, in these 3 years?
It definitely has not been a cakewalk, because as soon as we finished investing, the portfolios had a knock. At that point, nobody would be willing to listen to the argument that we have fallen less than the benchmark. Our benchmark is an extremely aggressive index, the NSE 500, which is financial heavy. We don't invest in financials, particularly lending businesses. We invest in financials which are not into lending businesses. So on the way down, our investor tends to lose less. But the investor doesn't want to look at that aspect at that point. If you say that his natural tendency is to think you are just trying to position your work favorably in the way it suits you. Whereas our idea was that the valuations are so attractive now that the investor puts in 20%, he is going to make a very high return on that incremental 20%. But it was very difficult to convince investors at that point in time. In fact, it was near impossible, because we didn't have the track record of performance where they would blindly listen to us and invest. So that track record itself is now being established under the kind of circumstances that we have seen in the last 3 years. So that made it very difficult. So what happened was, quite a few investors did not buy into our best ideas. and naturally it would impact the overall standing of the product and the returns of the aggregate. But we had no choice. We had to believe in the product and we had to believe in our investors. We had to keep going back to them and trying to convince them one at a time to participate in the idea and make them understand that they are not giving us money, they are giving their portfolio money at a time when it is favorable and made a lot of sense. And that was the biggest hurdle for us, and that's what made it hardly a cakewalk. So it's been quite a difficult thing. Now somebody who has completed 3 years understands the consequence of participation when valuations are attractive, buying when your portfolio is not showing such great performance, betting on new ideas which the product is going to bring into your portfolio, and ensuring that the quality of participation is consistent and growing. So that is what makes this rough path that we have encountered worth every moment.
Right. So you spoke about convincing your client to buy into the right opportunities, sir. So what happens when I try to convince a client? I need to have something which stands out. Solitaire needs to have something that stands out with respect to the other products in the crowd. What does Solitaire have that makes it stand out?
See, it's the philosophy, it's the kind of businesses we buy, it's the kind of risks that we take, and the fact that we take moderate risk to achieve superior returns. I think that's a very, very unique positioning for a product, and we have done it under very difficult circumstances without compromising on what we said we would do. For example, we have not gone and bought a bank or a Bajaj Finance just to improve our returns, because we have said that we won't buy businesses which are in the lending space.
Right.
So despite not having that, we have managed to do a decent showing, taking moderate risk and always having a research pipeline which will compensate for not having market moving stocks.
When we speak about moderate risk, we need to understand how the risk management of a financial product looks like. So where does Solitaire focus on the risk management perspective, sir?
Firstly, the individual position sizing is very, very moderate. We don't take a single stock to 10% at cost.
Right.
So we have a certain zone of comfort within which we operate. We ensure that we don't own too little also. So if you look at a mutual fund portfolio, it will have a long tail in which you will have several stocks between 1.5 and 0% of the portfolio. Our approach is to avoid that as well. So we want the position to be impactful, but at the same time not adding to too much risk. And then we want to grow that position as our conviction grows and valuation comes in our favor. So with more validation, the position becomes a bigger position, or with more attractive valuation, the position rises in its size. So this is broadly what happens inside the Solitaire portfolio, which differentiates it. Another important point, when a stock goes out of our zone of comfort in valuation, it leaves the new investor stock universe. It's there in the old investors portfolio, but it doesn't find a place in the new investors portfolio. So what happens is that people who have come into Solitaire at different points in time will have portfolios that have the same investment universe, same set of stocks, but not the same portfolio composition, and they also end up with fairly similar investment experiences because of the way in which we manage the process despite not having the same stocks.
Right.
So that is something which again addresses the need to give even the last investor who came in a good experience.
Right.
So we are not in that game of showing high return and then getting money and then buying the same stocks and then the return going down, but the investor gets locked in. That is not our way of approaching this.
Right.
We want to continuously keep working so that even the latest investor has a very, very interesting portfolio and something which will catch up with the older portfolios. So there is a certain continuity, and yet there is a different path that we set for the new investor.
Right.
That's something which is unique to our portfolio. Another point which I had just mentioned earlier also is the risk we take for the investor. In the same portfolio, if I have an investor with a higher risk appetite who is participating continuously, we can adopt the portfolio with the same stock universe to take on the risk which matches his personality. And at the same time, if there is another investor who is investing, there is a lower risk appetite, I can always fine tune that portfolio to suit his personality. So, if you see what differentiates Solitaire, and if I can say it in one sentence, Solitaire aligns to the investor. It's not about me, who I am, what is my personality, what is my investment style. Those things are not the focus of Solitaire. The investor is the focus of Solitaire. What is his personality? How is he going to invest? What is his risk appetite? What is his risk capacity? How much money does he bring in? At what frequency he brings in that money? Does he invest money when we tell him? Does he invest when the markets are down? All these factors go into Solitaire. So an investor can actually fashion a portfolio with Solitaire that completely aligns with who he is and what he wants.
Right. Got it, sir. So again, this question is linked to your previous answer, and it is the question that is on almost every investor's mind. Is it the right time? And how does Solitaire manage to answer that?
I would just draw from my personal experience. I have been 32 years in the market. I have been invested throughout. And at every market context, I have found opportunities. But you can't find opportunities for a full portfolio. You will find a few and then you will wait for others to come to your valuation zone. But in every context, there are opportunities. So you can start wherever you want to and whenever you want to. And as the market context keeps changing, you invest incremental money of 10 to 20% and participate in all the new opportunities which are identified by your manager and ensure that these continuous actions completely negate the risk of where you begin. On the one side, the manager negates the risk. On the other side, the investor also negates the risk by participating continuously. These two come together to do risk management in a way which no other product can do.
Right. So this in effect is what Solitaire is all about. At the end of 3 years, where do you think it is right now, sir?
I think what the product can do with a moderate risk strategy has been established. So now the product has the capacity to service more customers, it has a track record, and it has a very sound philosophy which will stand the test of time. So we are better prepared to service our new investors along with a proof of the concept of Solitaire and with the track record of what Solitaire can do when the investors believe in it. So in that sense, we are future ready. And we would always want to be future ready because our mission is to always remain tuned to opportunities and ensure that our investor participates in all these opportunities and not think about is it the right time. If we make the investor not think like that itself, we have won 50% of the battle. And if we make them participate when we alert them, we have won the battle.
Got it. I got it. That's wonderful. So we know that India is on a growth story, or India's growth story is something that is known to everyone. How does Solitaire position itself to capture this growth story?
We don't buy businesses with leverage, with debt on the books. So we find businesses which don't have much debt, which will participate in the growth story. Let's say the growth is 5%. These businesses will grow at 10-12% and the profit may grow between maybe 12 and 15%. Assume this economic growth rate goes to 7%. Then the business starts growing at 12 to 15%. The profit grows at 18 to 20%. Assume the economy grows at 8%. Then business goes to 15% and the profit growth goes to 25%. So our investor travels on this journey and Solitaire takes him forward by betting aggressively when the economic growth rate will be higher in the right places, and that in turn propels him higher. Broadly, I believe that we are ready to go on that path over the next 2 to 3 years.
That's wonderful, sir. So I think all of viewers got a 360-degree view of what Solitaire stands for and where it stands today. If you're interested in investing into Solitaire, please click on the link in the description and one of us will get in touch with you. Thank you.